JLR has been focused on its balance sheet, paying down debt. Is that the strategy going forward? Are you looking at zero debt, or might that turn to dividends for the parent company?
The plan is clear. This year we will go net debt free in JLR, and we want to be net cash from next year onwards. And that's the strategy for every one of our businesses, dare say even for the entire group, that established businesses need to live within their means and generate cash flow and fund their investments within their own means. And that's been the group chairman's mandate to the entire Tata Group. And we are no different from that. And we are executing that plan flawlessly. Yes, we have been a bit delayed by a year as far as JLR is concerned because of the semiconductor issue that we had. But we should get back into that journey this year, and we want to go net debt free this year. That's our guidance, and we are staying true to that. Thereafter, of course, the plan to keep building cash reserves will continue. The dividend policy as such is already laid out, and therefore we don't intend to change the dividend policy as far as JLR is concerned. They paid dividends last year, they'll pay this year as well. That's linked to the PAT of the business. And it's a percentage of 25 to the 40% of the PAT of the portfolio is of the business is what we are taking out as dividends. So that's not going to be any different going forward. At the same time, we should be very clear, we are not going to take away growth opportunities in any of the businesses because of the strategy. This is more about discipline. This is not at the cost of growth.
How do you continue to build profit for GLR?
Multiple sources. I think the most important one is premiumization. And one of the portfolio that have not delivered for us for a very long time is Jaguar. And we've just shown what the future of Jaguar could look like. That comes into the fold from 18 months from now.
So the strategy to get it to be profitable would be?
See, we're already at 9%. We're a very profitable business. Yeah, we make almost 2 billion plus of profits in that business. So therefore, we are comfortable from that perspective. Question is to improve the profitability from here on and go to our destination 15% EBIT margin. Key one that needs to come into the equation is also Jaguar has to contribute to the profit. So far, it has been a neutral to negative. That will come in. Second, as the revenue start building up, you start getting operating leverage. There is enough and more work to be done in reducing some of our wastages that are there within the business, be it on the material costs, be it on warranties, all the process efficiencies that we'll drive will continue. We want to be as disciplined on process efficiencies as we keep premiumizing the business. Both are important. Because why? It's simple. A premium luxury customer will not take a poor quality product. That means I improve quality, I get better sales, I also get lower warranty. So it's a synergistic loop on that front. So be it material costs, be it operating leverage, be it premiumization, be it better quality, all of which will put us on the journey towards the 15%.
I want to touch on the rebranding of Jaguar, that 30-second promo, which has generated pretty mixed reviews. What's your take on that? What are the benchmarks?
It is probably the best ever that happened to Jaguar at that point in time. Because for a brand, the worst thing to be happening is to be ignored. Yeah. And let me give you a different example. I come from the world of Unilever. Yeah. Before I joined JLR, Tata Motors 7 years back. You take a brand like Marmite, yeah? You love it or hate it, you can't ignore it. Yeah, that is, for Jaguar, this is the best thing that happened to it because there is a complete reassessment of what the brand is. And we put out some of the statistics of post the teaser and the reveal. The teaser was the one that generated the furor, so to say.
Even Elon Musk said something about it.
Yeah, I call it as earned advertising. I mean, it's earned media in your parlance. Yeah, and thank him for that. Keep that aside. Once the car got revealed, the conversation flipped to what a awesome vehicle that it is. You don't get twin EDUs, 800 horsepower electric vehicles which are absolutely wild in terms of their ride quality that it can deliver. That's what a Jaguar was. It's going back to its roots. We could never have pulled it off with an ICE portfolio. We could do it only with an EV because EV gives you torque on demand. And therefore, this is the best thing that happened to Jaguar. But this is just the start because this now pivots the brand into the future of how it premiumizes, how it goes luxury, how it goes back to its sporting heritage that is there. So more to follow as far as this is concerned. Jaguar will be in the news for the next 18 months when the car reveals. And also keep in mind, we are not intending to sell it to everybody. Yeah, suddenly my customers who are now looking at this product We used to be 65%, 65 years plus. That was the age profile for the loyalists of Jaguar. We respect them. We completely they brought the brand where it is today. But I also need to ensure the brand is relevant for the customers of the future. So suddenly post this reveal, post the launch, you're now getting 25 to 40 years as the majority of the customers who are looking at this. There are 27,000 expressions of interest. People who are wanting to understand what they're going to do with the product. Range Rover Electric, when the reveal happened, we got 57,000 expressions of interest. That happened after 1 year. In the case of Jaguar, this 27,000 happened within 2 weeks. So there's something fundamental happening to Jaguar. Watch the space. Let's see how it takes it.
So never mind the mixed review. There's a lot of interest in it.
There is a lot of interest. And 18 months from now, we'll know how this is actually landing on the ground.
Let's talk about the Indian budget. It's meant to boost consumption, especially among the middle class. How might that trickle down to demand for your cars?
Yeah, I think this budget is a very tricky budget because budget is set in a context. The external context we talked about a little while earlier. In that context, we were so keen to see in the budget that we have an additional lever of growth that is there. Because this country always had strong investment-led growth in the last few years in the way the budget has positioned itself. And even in our analyst call, we explicitly said we hope we see a consumption lever also kicking in, because it's good to have that additional degree of freedom in this kind of an environment. Export-led growth may not be the most, you can't bank on that. If it comes, great, but you can't bank on that in this environment. So therefore, to release almost 1 lakh crore of money into the system through tax reductions, while ensuring fiscal deficit comes down further from 4.8 to 4.4, means there's money going in, but that money won't be eaten away by inflation. And therefore, it's actually money in my hand. And that is 1 lakh crore. That's huge money going into the system. That system means that you're going to have multiple effects starting to play out. And with inflation is not going up, consumption will go up. The minute consumption starts going up, my trucks start flying more and more, because we are the largest cargo movers in the country today. So that starts moving out. While it may immediately go and hit maybe more the two-wheeler segment in terms of the put-on price being lower, but it also starts giving people the aspiration to have the affordability to go for it. The fact that there are I can now take a tax benefit on 2 houses that is there, means more money is in people's pockets. That gives you confidence. More money, more confidence immediately means consumption starts going up across the board. So I think it's an excellent move from that perspective, seen in the context of a continued fiscal consolidation. Both have to be seen together.
So you are convinced, you are confident that consumption will increase.
Yes.
How soon do you think that will trickle down to demand for your cars?
I think the tax changes happen from the beginning of April itself. People will see money in their pocket as of April 1st. Or depending on when they pay their taxes, definitely by June 30th, 15th, they have to pay your advance tax. So you'll get the money in the pocket by then. So, and don't forget, if my statistics are right, majority of the population is in this tax bracket, which has suddenly become tax-free. So there's only about 1 crore of population that's going to pay taxes. The rest of the guys are not paying taxes.
80% of the workforce.
80% of the workforce. That's huge. And these are the people for suddenly credit start improving. So I do expect from Q2 this year, Q2 calendar year this year, that is Q1 for us in the next financial year, we should start seeing demand coming through.
Could you hazard a guess how much demand that may translate to?
2 to 3%.
What are the challenges that you think the company will face this year? I mean, the uncertain environment externally, the macro environment is not looking good, and growth, of course, is slowing from, in excess of 8% to 6.5%.
So I think this budget will give that, getting it back to the 7-8%. If it gets it, I think it would have done a phenomenal job in terms of numbers. And if I look at my opportunity areas before I talk about concern areas, I think we have not had a great year this year. The previous year has not been a great year in terms of demand. But again, we should split it. Commercial vehicles, I think, is more going through its cyclical shifts that are there. But one should expect to see that coming back in the coming year as demand picks up, because investments are still continuing. There's no change as far as investment plans are concerned. And inflation is benign. I would expect to see interest rates to come down. And
as soon as this month?
I do expect an interest rate cut now, because
25%? 25 basis points?
Because you should see that. I would expect to see that. Should is a forceful statement. I would expect to see that, because 2 things. One is, if global demand is not so great, inflation is not in the horizon, and the country has lived within its budget and actually consolidated further. So why would I not take that additional punt in terms of put that growth, go after growth? It will give you salvation for a lot of other problems that are there. And also the concern, even from the market's perspective, if the FDI, if the FII monies has to come back, there will come a time when they reassess because their portfolio is now moving towards US. It comes back. If you are a fiscally prudent, growing economy, chances of you attracting investments are much, much higher. So that should come through as well. So, and therefore, from a commercial vehicle perspective, costs are benign, interest rates softening, growth in terms of cargo starting to move, and construct segment, tippers, etc. starting to go, you should expect to see construct coming back again. So that piece of it is how I see it. Passenger vehicles had 2 record years, and therefore maybe it's taking a little bit more time than what one would have expected. But all you had to go is visit the Auto Expo and see the amount of launches that are happening at this point in time. I think the industry will shake itself out of the challenges it finds itself by just innovating and putting the product intensity and offensive going. So it'll probably put more energy to get there, and therefore that should also get back into growth. Will it be scorching growth rates? I don't expect as far as PV is concerned, but it's not needed. I'd rather have a steady, consistent growth rate, and with the innovations backing in, it'll also get everybody in the right place.